always a pleasure to be with senior marketing specialists and all of your partners. And in turn, we believe they're our partners as well. So we'll take good care of you today and go through some great information that's going to lead up to the upcoming enrollment period, which is right around the corner. So as everyone prepares and gets ready, this will be more specific to the under 65 space. With Allstate, we do 0 to 99 in terms of all ages. So we'll kind of clear out all that up here in terms of what we do, just in case you haven't worked with us in the past. I'm going to take my camera off just so you don't have to concentrate on my face and all of its complexities here. So give a little self-deprecation. But at the end of the day, let's just get started in terms of what we're going to learn about. So short-term medical is a product that has been in the short-term medical is a product that's been in the market for some time here, and we are looking at it from a standpoint of the enrollment season, some things that are coming up with the short-term medical product, but let's get into it. As Sadie mentioned, my name is Andy Larson, Field Vice President, Regional Sales Director. Throughout the presentation, I do have a couple housekeeping items. I'd encourage you to take your phones out, and there's going to be a few QR codes that you'll have access to be able to take a look at how to connect with us, either with our calendars on our team to learn more about what we talk about today, or let's connect on LinkedIn. Allstate Health Solutions now has a LinkedIn page that will provide great content for you in terms of things that might be coming your way on the under 65 side, or even the senior market as well. So I encourage you to connect with us, connect with Allstate Health Solutions, and we continue on our partnership with that connectivity and another line of communication there. But for those of you who are maybe looking at us in the senior market only, Allstate Health Solutions is an all ages carrier. The Swiss Army knife image that you have here, while we are not condoning any violence with the Swiss Army knife, the idea here is that we do a lot of different things that a Swiss Army knife can do. And with that, our under 65 portfolio is where we've really built our business over the last 10 years as National General, now Allstate. And that's with the short-term medical product. Over time, the short-term medical product has taken on a life form of its own, just with some of the challenges in the under 65 space over the years. But that's not all we do in the under 65 space. We have a great suite of complementary products as well to help solve for other related parts of the health insurance quandary that put all the pieces to the puzzle in place to make sure your clients are fully protected. So as we think about short-term medical though, why short-term medical? So short-term medical has been in the market for about 30 years or so. And traditionally it's been for those who want maybe or need to satisfy a gap in coverage. Maybe it's somebody who has a waiting period for a new job, someone who's looking for a COBRA alternative. And for senior market agents especially, it's a great tool to help somebody get from maybe 64 to 65 when they turn Medicare eligible. Maybe they retired early, or maybe the Medicare enrollee is 65, but the spouse is still 62, 63. But with short-term medical, it's also been a great way for those that are maybe in the ACA market that want a longer-term solution at a more affordable cost with a national network. Some of the challenges of ACA over the years, if your client has low to no subsidy, short-term medical can be a cost-effective alternative. If they understand what it is and what it isn't, but want a longer-term options that go up to 36 months, short-term medical has been an alternative for those clients as well. But with short-term medical, it's important to understand what it is and what it isn't. Short-term medical compared to ACA, short-term medical is not ACA compliant. It does not qualify for a minimum essential coverage. It is not guaranteed issue, so it does require underwriting, and it doesn't cover for pre-existing conditions. So who is it a best fit for? Again, that low to no subsidy, and somebody that has low to no utilization. So they don't utilize services that often. They want something in case of the what if to fit their specific needs at a price point that's palatable. Someone who doesn't qualify for a subsidy could be in a lot of markets subject to $400 in premium in the lowest cost bronze plan. A short-term medical plan can be lower than, it could be as much as half the cost of an ACA plan, but they just want that coverage that fits their needs, low to no subsidy, low to no utilization. They understand that it doesn't cover everything and that there are some exclusions. Those who are not a fit though, maybe your client gets a heavy subsidy. Maybe they do have ongoing health concerns, so on and so forth. They're concerned about some of those limitations. That's going to be your ACA client. So always when we talk about suitability, we talk about advising our clients on what their best fit might be for that health insurance need. It's always going to be asking the right questions. How often utilize services? Are you on any medications? If this isn't covered, or would you be okay with that? So on and so forth. So it's important to be advisors in this role to understand if the product is suitable for them or not. Now, with our short-term medical plan, we have 3 different buckets of coverage. The Essentials plan is going to be more that low-cost plan, lower coverage period maximums, maybe some limits on outpatient services. So maybe that customer just needs to bridge a month or 2 in coverage. But where we see most of our sales come with the 3 different buckets is in the enhanced PPO level, $1 million of coverage period max, and that's coverage period, not lifetime. And the most common deductibles that we see are the 5K deductibles. Just from a price point perspective, rate relativities, and with the 5K deductible ranges, it can help tell a better story as well in terms of broadening the coverage, that when we get into some more of the strategy things to think about as it pertains to the enrollment period, we'll talk about here as we go along in the presentation today. Now, we also offer options that have copays as well. Now, on all plans, doctor visits are covered. With the copay plan, that's going to be offering a flat rate copay though for a primary care physician and specialist, depending upon the term of the short-term medical plan. You also find prescription medication or prescription copays here as well. But when we talk about why the enhanced plan is more popular than the copay plan, when you look at rate relativities in terms of what what might be a rate surcharge for the copays, most times people who are utilizing short-term medical plans, again, low to no subsidy, don't go to the doctor that often to even satisfy a copay. So therefore, the premium that is surcharged for the copay may be better served to be repurposed into other protecting products, such as out-of-pocket protectors we'll touch on here in a minute. In addition to our traditional short-term medical plan, we just launched short-term medical plans that are HSA compatible in the following markets you see in blue. We're the only carrier in the market that you'll find HSA compatible plans. So if you have a client that maybe came off of a group plan that had an HSA attached to it, or if your client wants to open up a health savings account where they can contribute money tax-free to withdraw tax-free to pay for qualified medical expenses, they can do that now with a short-term plan with Allstate. So what makes a short-term plan HSA eligible? It has to be considered a high deductible health plan. It cannot restrict certain benefits, expenses for hospitalizations, inpatient care, outpatient services. There are some minimum deductible amounts that are required, $1,500 for an individual or $3,000 for a family, and those deductibles must be satisfied prior to any coverage being in place, aside from preventive. And then maximum out-of-pockets cannot be exceeded. So when we look at the HSA plan designs, if you're in one of those markets, you'll find that the deductibles are going to be on the higher end. We're looking at, just for sake of simplicity, keeping the deductibles relatively equal, $7,500, that max out-of-pocket for an individual. But preventive is going to be covered first dollar, child and preventive care. So that's going to be a feature that's different on the traditional short-term plan. That would be subject to deductible and coinsurance. On HSA compatible, preventive is covered first dollar benefit. I'm not going to go through every single line item on these little charts here. I will refer to the brochures, so that way you can do some study on your own. But certainly the concept-wise of an HSA is very appealing to a lot of people, especially those that may be self-employed, those people who maybe don't qualify for subsidies because they are maybe higher earners. They're contributing to the HSA, so that HSA might be a way to go, but a differentiator if you're in any of those markets with Allstate. Just some additional highlights here, though. As far as the underwriting is concerned, it's very simple. It's yes or no. accept or decline. So therefore, if your client answers no to a question or yes to a question, it'll tell you right on the spot if they're eligible for this plan. You can pivot them to a ACA compliant plan if they're still in the under 65 space. We offer next day effective dates, but keep in mind that if for next day effective dates, there is a 7-day waiting period for sickness. So keep that in mind. And as far as accident, injury, that covers next day. But 7-day waiting period, just because that's kind of taken away some of that adverse selection, why people might buy insurance because they're sick and they need to go to the doctor. We offer child-only options as well. So with child-only, that's a great fit for those that might be on a group plan today, but their employer is not subsidizing any of the premium for the child portion. So we can do a child-only as little as 60 days old. But on the flip side of that, we can go up to 64 years and 10 months. So really, for that client that you might have that's going to be going on Medicare, the short-term plan can be a great way to fill in that time. We waive our deductible on urgent care. Some plans in the market will have urgent care subject to deductible and coinsurance. We waive that deductible. So if you have a 100% coinsurance plan, that really makes the urgent care a $50 access fee, and that's it. In most markets, we offer or we file our product through an association, and with that comes member benefits. We'll talk about in a second. States like Missouri, Nebraska, for example, it is optional. So be sure that when the quoting tool pops up, that you're selecting that you want to include that life association membership. And we'll talk about what you get for that in a second here. But there are some markets where we file individual as well. So the life association membership will not be available, but some of the same components we'll talk about in a second will be available through a benefit called My Life Wellness. That's a standalone that you can add on. But in general, what do you get for the life association membership? Why am I picking this? Why are you telling me to choose this and make sure you add it to the cart? Why are you asking me to look at the standalone benefit if it's not available? The reason being is that with the life association membership, your client gets access to 24/7 access to a physician via phone or video at no extra cost. So again, thinking about people who might utilize short-term medical, maybe it's the urgent care client, maybe it is somebody who just goes to the doctor when they need to. They're low to no utilizers. So therefore, if they do have something that pops up, the telemed for life can be that first line of defense. Instead of going to the doctor and paying $150 minus discounted rate for network, they can connect with this doctor with the telemed for life at no cost at the point of that incidence of whatever it might be, however they're feeling. And for some things that might be minor or not require further examination or blood draws, they can provide prescription recommendations over the phone for things such as a UTI or earache, whatever it may be. But also included within this is a discounted benefit for fitness centers through Active and Fit. If you are familiar with our Medicare supplement, you'll be familiar with Active and Fit here, because it's the same benefit that is included within our Medicare supplement plan. But your clients will get a discounted rate of $25 per month for Active and Fit for about 9,000 fitness centers across the country, including the local ones like Anytime Fitness, Snap Fitness, LA Fitness. Most YMCAs are included as well. So me personally, I used to have as a key term, a membership at Anytime Fitness, and that costs $47 per month. For the Active and Fit benefit, that will get them access for $25 a month. So that's almost a $23 savings. So with that being said, that $23 savings, what is the value of the Life Association membership? How much is the Life Association membership part of the product? It's a $15 value. So even having that Active and Fit benefit will more than pay for the cost of the association membership. So be sure to include that if it's optional or not available in your market, include it with the My Life Wellness. These benefits will be included. Now, that's just kind of an aside here. And with our short-term medical, we do offer some great premium discounts that you won't see in the market. Now, the first discount is a 20% discount for our preferred rate customers. The preferred rate discount is offered for the most healthy that can answer additional 5 underwriting questions. The underwriting questions are on if they had prior coverage 9 out of the last 12 months, are they non-tobacco, do they own or lease a motorcycle, any DUI or more than 2 moving violations in the last 2 years, and have they had any prescriptions prescribed or have they utilized for high blood pressure, anxiety, depression, and cholesterol. If they can answer those preferred rate questions, they qualify for that 20% discount. About 35% of our clients are qualifying for the preferred rate discount. So great incentive there. 20% can tell a lot of stories and can help maybe perhaps tell a better story by repurposing some of those premium dollars. In addition, if your client chooses a term duration of 12 months or less, and they have the ability to pay all up front, do a single payment, that's another 20% discount. So if you're familiar with our Medicare supplement product, how we have that 10% annual pay discount, similar concept here. So if your client pays annually, that's going to allow them to get that discount. And if they combine both discounts, it's an approximate 40% savings. So that can tell a pretty good story. Save your client between $240 to $2,400 per year, depending upon the client, the demographic, the family makeup, what benefit designs were chosen. So that can be some significant savings just off of the standard rates. So with Allstate, our premium discount story is very powerful as well. Now, one reason why people look at short-term medical over a traditional plan is that they are looking at networks. When you look at ACA plans, most ACA plans will have some sort of a limited network. Maybe they only have contracts with certain hospital systems in certain areas. Depending upon the state, depending upon the market, there might only be 1 or 2 carriers that are available. Now, over the years, there have been more ACA carriers that have entered the market just by virtue of the market stabilizing some on the ACA front. But 3-4 years ago, you might find 6 or 7 states where there's only 1 carrier available that maybe had a limited network. So in that case, people chose short-term medical because of the broad national PPOs. So get a national PPO at a more affordable cost. It's very appealing for a lot of people if they understand what the concept does and what it cannot do. So we have 2 different options here. The Aetna Open Choice Network is our most popular option by about probably a 95% margin. But the Cigna network is also available and will always default to which is the more affordable network. Now, we've hardly had any concerns over the Aetna or the Cigna network in terms of its availability. So great networks that you can count on to have access. Your client likes their doctor, they can keep their doctor in about 95, 98% of the cases. So speaking of term durations and short-term medical, what is short-term medical defined? A short-term medical term is defined as 12 months minus 1 day. But in 2018, there was an executive order signed by the Trump administration to extend short-term medical terms beyond 12 months. So with that, we refiled our products to allow renewable provisions and created other concepts to go beyond 12 months up to 36 months total for a short-term medical solution for your clients. So what are our flexible term durations beyond 12 months? Well, first off, we offer renewable plans. The renewable plans are 1 contract that have renewable provisions. So it'll at the end of the first year, it will renew for the second year, or it can renew for a third year, 24 or 36 months total. Now, with renewable plans, at the time of renewal, your client will get a renewal rate. So that could be an adjustment based upon what the trend, experience, so on and so forth, just like any other health plan. With our renewable plan options, though, if your client is willing to pay a surcharge, they can get the certainty of a guaranteed rate for that 2 or 3 year period. So it can tell a powerful story. So the renewable plans, though, from a comp perspective, will also renew, or excuse me, on the renewal commissions, second and third year would also reduce based upon how the contracts or how the commission schedules are set up today. The second option is a 24-month solution, which we call consecutive plans, or sometimes you'll hear 12x2. Now, over time, this has been the most popular durational component, just because with the 12x2, we are issuing 2 contracts at the same time. So if it's $1 million coverage period, it's 2 contracts, so $1 million coverage period for both a 12-month solution. So 2 12-month contracts, 24-month solution, coverage period, maximum resets. So $1 million for both. On renewable plans, the coverage period maximum doesn't reset, so it's $1 million for a 2 or 3 year period to spread over the 3-year period. Why people look at the 12x2 or consecutive plan options, though, is that because we're issuing those 2 contracts at the same time, we are showing the rates for both 12-month terms at the time the client signs up. So there's rate certainty without that rate guarantee buy-up that has to be implemented. So your client will see what that trend will look like the second year, what if there's any age band differences, but they'll know going into that year or going into that first term what they will pay over that 24-month period. So there's certainty there. And for you, the agent, we pay flat comp for both years. So therefore, there's no drop in your compensation, and you can plan out your revenue that you're generating from that client over a 2-year period as well. Certainty for you, certainty for the client. It's a win for everybody. Now the question always becomes, okay, well, beyond 12 months, that's great. You said there's pre-existing condition limitations. What happens in year 2 or 3 if my client gets sick in the first year? It's a great question we get all the time. And the answer to that is, after the first 12 months of a duration that goes beyond 12 months, we no longer do checks for pre-existing conditions for eligible expenses. So easier said, eligible expenses for pre-existing conditions are covered after a 12-month coverage period. So if your client gets an unfortunate diagnosis in the first 12 months, we will cover it in the second 12 months, and so on and so forth. That being said, the beauty part of how our system is set up right now is if your client looks at short-term medical as a solution, it's a fit for them at that particular time that they enroll. The nice part is that every year we have an open enrollment period. If their situation changes, they can always look at a going on to the marketplace on an ACA plan, because of their health situation might change and they may need that broader coverage. So with the market today, the market is trying to tell us that ACA is a one-size-fits-all for everybody, but truly it's not. We have our traditional clients still that don't go away, those that are in between coverages and so on and so forth. But that alternative client, someone who is looking for something other than the one-size-fits-all, can really get some benefit from some of these longer-term durations. Now you might be thinking here, Andy, well, these durations past 12 months, wasn't there just a proposed ruling that came out? And the answer to that is yes. Unfortunately, there is a threat to those longer-term durations, and likely those longer-term durations are on a short shelf life. Reason being is that back in July, the Biden administration announced proposed new rules for short-term medical that would limit short-term medical to 3 months with a 1-month renewal option. So short-term medical would be a total of 4 months in total for an individual before they would have to rewrite it with another carrier. But we are still in a comments period right now. And the comments period says that you can submit your comments in terms of why you think this is a bad rule. Maybe think it's a good rule, but why you think it would be a bad rule. Reality is here, for the impact to the client is that it hinders a choice for a more affordable option where it makes sense for that client that doesn't believe one size fits all, where they're suited. And B, it can leave your client exposed in the event that after a 4-month term that maybe they get an unfortunate diagnosis, they're going to have to rewrite and they may not qualify, leaving your client perhaps uncovered if there's no ACA or group alternative to fall back on. So therefore, it's an impact to your client, but impact to having to rewrite and running that risk of not being able to rewrite. So we're still in that comment period. That should end about September 11th. About 50 to 75 days to draft final rules and implement. So we believe that it's going to be in early 2024 before anything is implemented, but because it's a government, it could happen anytime. So we keep an eye on this. But our official stance is that we believe that in 2024, that early 2024, that short-term medical will be limited to 3 months. So until then, there's an opportunity to secure a longer-term duration for those clients that are a fit for this concept, up to 3 years. So the 3-year plans, renewal or the rate lock guarantee. So therefore, your client's not going to be looking at what's going to look like year 2 or year 3. There's going to be some announcements from Allstate coming out here very soon about what we can do to help incentivize that as well. So keep an eye on that. But at the end of the day, there's lack of better terms here. We don't want to call it a fire sale just because that's somewhat of a term that might be, may have different connotations depending on how you receive it. But there's an opportunity here to make sure that our clients are secured for those effective dates going into next year and beyond, if the choice is clear for them that this is something they're suited for. And again, we'll look at next year, see if those goalposts move again with another election. It seems like this ruling, 3 months, 36 months, now back to 3 months. It's just based upon who's in charge. At risk of getting political on it, that's really the reality of it. It's who's in charge, who's making the rules, and it's truly the political football as this graphic here describes. So something to keep an eye on, but an opportunity nonetheless. There are grandfathering provisions within the rule that appear to be there already. So if a policy is written for a longer term duration, those will not be impacted. It'll be simply on a go forward basis that once that rule is implemented based upon the date they choose, going forward 3 months. So more to come on this. We'll keep an eye on it, and we'll let you know our response. But we're already looking ahead in terms of solutions to combat, to help some of these clients where one size may not fit all. As you look at your market, you may be in Missouri, or we're home of senior marketing specialists. You may be in Texas. You may be in Illinois. You might be in Kansas, for example. It's important to understand what is available in your market, because not all term durations are available in every market. Some states, such as Iowa, requires a 3-month minimum, but can go up to 36 total. But 3-month minimum, your client has to buy 3 months, but they can cancel after a month if that's all they need. So this grid here that you'll find in your agent back office is a great tool for you to be able to know what's available, what are the rewrite rules, what are the term durations that are available, is the association available, is it an individual's file state, so on and so forth. So this is available on your dashboard of your agent back office. So I encourage you to have that handy, so that way if you are crossing state lines, you also know what will be available, but the quoting software will always default to what terms are available in your market. So that's a short-term medical. And as we think ahead to the busy season, what our strategies are going to be, how do we provide the most value for our customers, it's important to understand that short-term medical is just the core health plan. But as we look at some other ways to complement the core health plan, it's important to understand why we complement the core health plan, and why we maybe look at some of these supplemental options that Allstate offers, where you can create a package of products on one application, one bank draft, to provide what we call the circle of protection. I think of a circle, you think of maybe a wheel. If you have a flat tire or there's a tear in the sidewall, it's not going to run. It's not going to let your vehicle run. You're going to have to change it, right? So same with your health insurance. If that circle is not continuously spinning, then you're going to have heartache as it comes to your client utilizing their health insurance concept, no matter what it is. So when you think about core health plans, so whether it's ACA or short-term medical, all core health plans have gaps. And the biggest gap is the high max out-of-pocket. Most people don't even know what their health plan is. They just know who the company is. So it might be my health insurance is Allstate, my health insurance is Blue Cross or AM Better, whatever it might be. But they don't know that high out-of-pocket exists until they actually have a claim. And maybe they don't even care or don't know until they've had that claim, but that's when it really hits the impact. When you look at what the average maximum out-of-pocket is, whether it's ACA or short-term medical, it's going to be up there. And we see it if you're in the Medicare space too. There's a lot of $0 plans out there. The average MOOP on Medicare Advantage even is $4,800. So even in the senior space, you look at hospital plans or cancer plans, whatever it might be. But some of these plans here, say ACA, for example, might have some limitations on out of network, or there may be terms that are adverse for going out of network, triple the out of pocket for out of network for a family, whatever it might be. But when we think about most health insurance agents, the typical outcome they look for is that they provide is that one size fits all, which they sell the core health plan only, providing that major medical stop loss, but that only makes that circle spin part of the way. The coverage solutions that are out there are missing, most of them are missing that supplemental solution that can pay for the first dollar benefit based on a accident or critical illness, whatever it might be. So when we look at the circle of protection, we look at the core health plan, we look at the MOOP, but also what are some added benefits that we can add to the solution to make sure our clients are covered? Because when that circle is not covered, when it's just that one size fits all, your client is going to be shelling out thousands of dollars to the doctor. Now, that might be something they can do, but why not take away that financial impact while they're dealing with the emotional impact or the physical impact of that claim or diagnosis? That's our role as advisors, and that's taking the next step in closing that circle. And we bring this up as a way to make sure we're as we prepare for the next quarter here, the busy season, that we have our story straight. So, is the story mitigating against high MOOP, providing cash benefits above and beyond? But the idea here is that if most agents are selling that one size fits all core health plan only, you can differentiate yourself from them as a trusted advisor in your area, and that can lead to as these plans work, as you look at some of the diagnosis statistics of someone that might get cancer, how often an accident happens, it's staggering. I know Senior Marketing Specialist is making some emphasis on the cancer side of things to create awareness there that the financial impact is real. So from that perspective, when these plans work, when your client has a positive outcome where they save money because you created a circle of protection for them, that differentiation that you provided can reach beyond just your client. That can generate referrals, which when you generate referrals, that also can reduce your acquisition costs. The more products that you have with a client can reduce your acquisition costs. Also increase your persistency. We all know that those are the building blocks of building a block of business, referrals, so on and so forth. You throw all that into the melting pot. The end result is you're growing your agency and you're reducing your acquisition costs. Your revenues are on the rise. So what are some most popular products that we offer? Well, first, what we see as most popular are accident plans. And in telling your story, you can look at it from a guaranteed issue perspective. Accident plans are a guaranteed issue. The Plan Enhancer is a product that's an accident medical expense, so it has benefit levels that can range from $2,500 up to $18,000. That can either provide a benefit for a budget, can provide a benefit that subsidizes a portion or all of your out-of-pocket for both short-term medical and ACA plans, or it can go above and beyond based upon what that need might be. So very flexible in how you can design this. In most states, some states, including Missouri, for example, doesn't apply, but based upon the state, there are optional riders in this product for cancer, heart attack, stroke, and then another rider for hospitalization due to sickness. Both of those are guaranteed issue should your client have those events. The same benefit level will apply for those riders, but the Plan Enhancer tells the best story in the industry of not only of covering all the reasons why someone might be concerned about that high out-of-pocket. If you're in that meeting and you ask the questions and saying, who's your accident plan with? Most people will say, I don't even know accident plans existed. So that opens you up as an advisor and so on and so forth to tell about these products. Continuing on with the GI option, our Select Dental plan is very popular as well. Dental is one of our fastest rising products in our full portfolio, aside from Medicare Supplement. So our Select Dental, big components here, day one coverage for basic and major services, up to 3K max with increasing benefits, a national network with Aetna dental administrators, orthodontia up to age 18 on our Prime plan, and there's an optional vision network, vision rider available through the Avisus network. No waiting period for basic or major services, benefits and premium priced and made up to beat or meet all of our competitors in the market. So very popular. Now, lastly, we go more on the standalone side with a specified disease, our cancer, heart attack, stroke plan. This is an underwritten plan, 8 underwriting questions, yes or no, accept or decline. But these benefits start at $25,000, so it can go above and beyond just the max out of pocket. So lump sum for first ever cancer diagnosis, and then again for first heart attack or stroke event. So it pays in 2 buckets. So $25,000 can not only offset the max out of pocket, but can also provide benefits to go above and beyond for things like time away from work, home modifications, take away that financial impact that your clients are undergoing as it pertains to that diagnosis. They can utilize those dollars to help offset that time away from work, so they can just focus on recovery and focus on the emotional impact of that specific claim. Because let's be real, if your client gets a cancer diagnosis, their life is turned upside down. Let's take away that financial impact for them. So those are just some of the initial products. We could go 3 hours on this, but I want to wrap this up here just by talking about what your story might look like for this year, and that's closing the circle of protection. So we talk about short-term, some of the complementary products. As we look ahead to the busy season, what does your solution look like? Again, we talk about the core health plan, the MOOP, the added benefits. We look at, let's just say, for example, take an example of a 40-year-old male in Iowa. You can take your market and you can supplant this, the same story. Now, in this particular case, we're looking at an ACA plan. Client is looking at, they earn $50,000 per year. Prior to all the enhanced subsidies that the American Recovery Act and the Inflation Recovery Act added to the ACA marketplace, 3 years ago, this client did not qualify for any subsidy. Now they qualify for a $121 subsidy. In this particular scenario, Iowa, the lowest cost bronze plan after subsidy is $181. So that's one portion of the circle. The next section, we're going to subsidize that deductible for accident and hospital with the plan enhancer. So that's and then we're also going to add in that $25,000 cancer, heart, stroke plan. We're going to throw in a dental plan too on top of it. With our dental plans, your clients get a 15% discount on the dental premium if they bundle it with any other Allstate products. So we're looking at this simply on the ACA side, right? Now, what is the outcome here? So the ACA plan plus all the MOOP protection plus the dental plan, $285.90 per month. So if you're in the ACA market and you're looking at saying we sell silver plans, the lowest cost silver plans after subsidy is $316. So by simply shifting from a silver plan to a bronze plan, that silver plan at $316 has no added benefits. That still has a potentially $8,000 to $9,000 out-of-pocket exposure. But now with this package of products for $30 less per month, you still have that minimum essential coverage with the ACA plan, but now you have all those added benefits to help your client offset that out-of-pocket exposure. When you consult your clients and you ask them the questions before you even get into the core health plan, who do you have your accident with? Who do you have your cancer insurance with? That sets the stage for be able to tell the story of the circle. And to boot, with these supplemental products, those complementary plans, that can earn you an extra $460 in first-year commissions with renewals to follow. Now let's take a look at it from a standpoint of short-term medical. So short-term medical, for example, this is with a 12x2 plan, preferred rate customer in the Iowa market. We have this canned example here. $5,000 deductible, $169.22. That's the core plan. They chose the alternative route. We added that same package, the plan enhancer, with $5,000. So they have that $5,000. So that offsets the initial deductible for accident and for hospital. And we have that specified disease rider, that cancer, heart, stroke plan, $25,000 standalone plan. We're going to continue to add that dental plan in, but we look at the solution for that client, $65,000 a year, no subsidy. this solution is going to help your client with a $273.35 premium. When we compare that to the lowest cost silver plan or even the lowest cost bronze plan without a subsidy, you're looking at in the $350 to $437 range for the lowest cost plan in this market. That lowest cost plan has no added benefits as well. Now you could go the route, choosing your flavor, whatever that might be. You have your short-term medical only compared to that plan. That's a huge savings, but that short-term medical plan still has exposure. So it's important to discuss that, closing that circle of protection, whether it's a short-term only, adding some of these protectors, but you can tell a powerful story for your client. Right? The numbers here don't lie. There's significant savings, but also that commission as well. So hopefully we've exposed you so far to just what the short-term medical product looks like, some of the complementary plans that go along with it. How can we craft our story for the busy season? Again, keep your phones out. We're gonna have some more QR codes to help connect and to help you take these concepts a step further to schedule some additional time one-on-one. But before that, it's important to know that what is the process? First of all, you have to be contracted with Allstate Health Solutions to get access to running quotes and scenarios and to enroll. When you get contracted, you'll get a welcome letter. It'll have you register for what we call the agent back office. That's your hub for all things Allstate Health individual. At Allstate Health, you'll be able to find those guides. So like the short-term medical guide that we talked about, what are the term lengths, so on and so forth, that'll be housed right here. You'll be able to see if you have short-term medical clients that have a policy that's coming up to the exhaustion of the term that was chosen within 30 to 45 days. People or clients that may have NSFs or past due, maybe their credit card expired. You can look at appointing agents or even looking at all your clients as well. But to get to the scenarios, you go to quote and enroll. And most recently, if you are familiar with our senior market quoting platform, we have recently migrated our under 65 experience to look exactly the same as the senior market. So for those of you who have been partners with us over the years on the Medicare supplement, are familiar with our e-application, this should be pretty easy for you to follow and be able to pick up right away. Now there's more moving parts on the under 65 just because there's more products, talk about term duration, so on and so forth. We're about almost a month into this platform. Hasn't come without any hiccups, but at the end of the day, you'll be able to get into quotes within seconds, enrollments within minutes. You can send quotes to your clients to apply online. For under 65 products, it's electronic enrollments only. We don't offer paper enrollments on the under 65 side. But for sake of that, once your client enrolls, again, accept or no, yes or decline on all the underwriting, they'll know on the spot. But once they enroll, you'll be able to have an instant ID card for them as well for their short-term plan or dental plans or any plan that has an ID card. But your client will also get access to their own portal through myallstatehealthsolutions.com. They can view policy documents, check their payment methods. They can file claims for accident plans there now, see all their EOBs, so on and so forth. So for a demonstration on how to quote and enroll or to get any more questions on the products itself, you can always contact me, but I recommend you get on Sherry's calendar as well by taking a picture of her QR code on the screen. Sherry is our under 65 sales manager on our team. If you work with Chris on the senior side, Sherry and Chris are our subject matter experts. Chris on the senior front, Sherry is the go-to resource for anything under 65. So I encourage you to get to know Sherry, a great resource on our team. And if you want to get on her calendar to spend a few minutes to learn about the system, how to get up and running, and to put some of these solutions together in a cart, she can do that for you and help you on your way. So as we wrap up here, I encourage you to ask any more questions that Sadie can moderate when we get done here. But as we wrap, important to let you know that we do have some bonuses going on for our under 65 products for third quarter. So we have one more month to go here, but with our short-term medical product, it's 10 policies to get in the door. So that's the minimum floor to qualify for the bonus. And the payout will be based upon a term duration. The payout will be either for 12-month plans, 12x2s, or renewals. The bonuses range anywhere from $50 to $200 per policy. We pay back to policy one, but these are only available in states that offer 12-month solutions, except Tennessee. So if you're in a 6-month state, this bonus won't be available. In addition, we have a bonus for supplemental plans as well. Sell 10 policies of $20 or more to get in the door. We'll pay anywhere from $30 to $70, depending upon what product is sold. For example, you sell 15 dental plans at $30 each. That's going to be an extra $450 on top of your first year commissions to go with that. So some incentive here for third quarter. As we approach fourth quarter and understand some of the proposed regulations, again, we are looking forward to a very, very robust short-term medical season for those clients that are suited, clients that are on the books that are looking to extend the runway with rewrites where allowed, new clients that might be suited for the concept. It's going to be a busy season. Be on the lookout for some additional bonuses for fourth quarter for the short-term medical. I promise you they're going to be very juicy, so you're going to want to take advantage as those roll around. So more to come on that as they get finalized and as they get approved. But these are agent-facing bonuses for you to take advantage of as we go. And as we approach the busy season here, I want to introduce you to another rewards program that we've launched in the last couple months, and that's called Elevate Rewards. Elevate Rewards is a loyalty program for any under 65 supplemental products and our senior market plans, such as the Medicare supplement. The only product that it doesn't cover is short-term medical, just because of margin reasons and whatnot. But when you sell any of our supplemental plans or our Medicare supplement, if you are signed up for Elevate Rewards and if you are registered, you will begin to collect points. Those points are going to be $2 for every initial monthly premium collected. So for example, if you sell a $150 premium on a Medicare supplement plan, that'll be 300 Elevate Reward points. As you continue to accrue points, you can redeem from a catalog of over 900 rewards. For example, 400 points is going to be a $10 Starbucks gift card. So that could be 2 policies, that gets you a $10 gift card. We have agents that have utilized this program, collected over $2,000 worth of rewards, those that participated in a pilot through last enrollment season. So therefore, you have a great way to not only earn good commissions with Allstate, bonuses with Allstate, but being a loyal partner to Allstate, you can rack up those Elevate Reward points. I believe it's 4,000 points will get you a $100 gift card for American Airlines. So all sorts of different ways to be rewarded as an agent as you serve your client and offer them the most robust solutions that are available in the market, closing that circle of protection. Lastly, on the QR code front, I've thrown a lot of QR codes, getting really modern on you here today, but it's important that this is, if you bookmark anything else, take a picture of this bookmark. This is going to bring you to my resource page for our team, for myself, Sherry, and Chris. It will get you access to all of our contact information, all the brochures. There's going to pitch pages that have one-pagers of all the different products. We'll have an access to sign up for the Elevate Rewards. Again, you have to sign up to begin earning points. It'll take you to our YouTube channel as well. So any of the products that we've talked about here today, our YouTube channel has all the different tutorials in terms of just that more in-depth, in the weeds, that 5,000-foot view. You can spend as much time in there as you want on the YouTube channel, getting to know some of these products to prepare yourself for the upcoming season. In addition, any upcoming webinars, seminars that are coming your way, you'll be able to register for those there and also view recordings of past webinars as resources for you. So I encourage you, if you didn't bookmark anything else or QR code, take a snapshot of this here today and make sure that you have this bookmark on your PC to have that resource at your fingertips. With that being said, on behalf of our team, it goes without saying how much we appreciate the partnership with senior marketing specialists, and then in turn, you. We're all partners in this together, and our success is based upon yours. And as we approach the busy season for both the under 65 and the senior market season, we look forward to working with you, and between Sherry and Chris and myself, taking away any roadblocks that might come your way. So with that being said, I'll turn it back over to Sadie. If there's any questions, we'll be happy to take those now.
Yes, absolutely. Thank you so much. There are a few questions here, but just a reminder, go ahead and throw your questions in there if you have any, and otherwise we'll get you guys out of here in a few minutes. But okay, let's see. First question. So if someone waits one day rather than the next day, they don't have a 7-day wait period for sickness. I think this was back towards the beginning of it.
Yeah, great question, and I should have expanded upon that. If you choose an effective date that is 8 days out from the day the policy is signed, then we waive that waiting period. So common sense prevails in that standpoint, but it's just with signature dates that are within 7 days of the effective date.
Perfect. Okay. Let's see. Any reason why you only offer 5 million on the most expensive plan already, since it is a copay plan?
Yeah, it's just the rich called the good, better, best, right? And just more rich plan, have more added benefits to it for those that want that higher peace of mind. When you think about short-term medical claims in general, very rarely does anybody go over $1 million in claims. I don't think I can count on two hands all of the policies that we've sold as a leader in this space, dating back to Nat Gen the last 8-9 years, if we have any that have gone over $1 million in claims. So it's more or less that 5 million looks good in terms of that. So that's just our rich plan. It has the co-pays, more bells and whistles.
Perfect. Let's see. Will you let us contract for auto if we have a PNC license and they do life association and they do the life association membership? Sorry.
It's in terms of auto, I don't believe there's any pathways at this time. National General, fast rewind. Allstate acquired the complete holding company of National General before we became Allstate Health Solutions. We were National General, obviously. So if there are National General opportunities within your area, the National General is the independent distribution for auto still for Allstate. So I encourage you to look for a local National General rep in that perspective.
Perfect. Let's see. So a little bit of a clarification question on the cancer side. So if I sign up a client and they get cancer, will the plan pay for that?
If they sign up with cancer, there's a 30-day, I believe it's a 30 or 90-day waiting period on the cancer side. We have about 1,000 products here to get it all straight here, but there is a waiting period on that. But if they get cancer, then it's a lump sum benefit. So it would be the 25,000, 50, 75, whichever they choose. There are certain cancers that will pay a partial benefit. So that's also a part of it as well. So there are some examples within the scope of the brochures as to how it will work, and on the training materials on the YouTube channel. So I encourage you to look at those and get a better feel of how it would work.
Perfect. Okay, and we have one last question here. Illinois already has limitations on the short-term medical side. I believe it is 6 months. Do you have an automatic second 6-month renewal in that case, or is it re-underwritten for pre-existing conditions?
Great question. So in Illinois, and every state is different, right? So in Illinois, they might have a rule that says, or their rule actually states a 6-month term, you cannot rewrite it with the same carrier. So that's where you would have to re-underwrite with a different carrier at that point if they go down that path. For example, even Wisconsin is a state where they limit short-term medical to 18 months. So after the 18 months, you have to rewrite it with another carrier. Some states, such as Kansas, you can only do one rewrite. So we offer only the 12x2 solution there. So one rewrite, but then you have to have a 30-day break before buying short-term medical. So every state is different. Majority of the states have no rewrite rules and can go up to 36 months, but that grid will certainly show the 10 states or so that have those limitations and what those look like.
Awesome. Well, that's all the questions that we have right now. If you have any follow-up questions, please feel free to reply to the follow-up email that you will get. If we can't answer it, we will pass the questions along to Andy and get those questions as well. Hopefully you got lots of QR codes throughout this as well, so you know who to contact for what. But Andy, thank you so much for putting this together.
Oh, thank you for having me. It's always a pleasure to be with you guys. And again, continuing on the great partnership. So thank you. All the best to everybody in the enrollment season.
Yes. Thank you so much, everyone. We'll get you back to your day. Thanks.
Thank you.